Australia, and raising a question as to whether we might get some surprises in the Fed's future as well. Bear in mind that only at the start of this year, the Bank of Canada was communicating a conditional pause. Does that sound familiar? Is that what we'll get from the Federal Reserve next Wednesday?
Is there such a thing as a conditional skip?
A conditional skip? A conditional pause?
That's how silly this is.
They're going to spend 24 hours talking about this. Are we sufficiently restrictive? You can wait and find out.
I'm all Bank of Canada on this, you know.
Do you think surprise? Just go for it.
Just make an announcement.
Just make an announcement and move on.
Yeah.
Do you have the luxury of doing that if you're the Federal Reserve?
Not in the communicative strategy of this year.
I'm going to offend Canada again this morning. Forgive
me.
You're
doing good.
Second-tier central bank. It's a second-tier central bank, okay? When you're a second-tier central bank, you have the luxury of delivering surprises. I don't think you have the same luxury if you're the chairman of the Federal Reserve, for that matter.
We'll probably hear from Mr. Trudeau today, not only on central banking, but also on fires that have gripped the nation, and particularly the Northeast. We are thrilled to bring you our Senior Vice President, Lack of Hysteria. Rob Caroland has done weather for Bloomberg Surveillance since time began and joins us on radio and television. Rob, thank you for taking time out in a crushing schedule. When do the smoke, when does the fumes, when does it all move on?
It's going to move on this weekend, Tom. There's going to be a change in the flow pattern. Right now, we're in a stagnant pattern with an upper-level low of the Northeast, but by the weekend, that system breaks down and moves out, and we should see a bit of an improvement.
Rob, how does this compare to the rest of the world, what we're going through right now in New York City, in the tri-state area?
New York City had the worst air quality in the world, both yesterday and the day before, Jonathan. Off the scale for particulate matter floating through the atmosphere in New York yesterday and the day before.
Rob, it's just amazing. Have you ever seen anything like this in your career?
No. You got to go back to May 19th of 1780 to have anything of any precedence in the Northeast. That was called the Dark Day in New England. Wildfire smoke caused people to have to use candles at noon from Portland, Maine, all the way to New Jersey on that date in 1780. So it's been a long time since we've seen something like this.
Do you have any ability, Rob, one final question here before we move on. Do you have any ability to say this will be repeated through the summer? When you look at Canadian weather people and all about the fires, can this happen again?
It could happen again, Tom. My hope is that this next upper-level low that moves in Monday through Wednesday is going to bring some rain eventually to parts of Quebec and Ontario and maybe help reduce some of those fires that are currently taking place.
Hey, Rob, it's been too long. It's wonderful to get your perspective on things. Rob Carolan there of Hometown Forecast Services. TK, some seriously crazy smog in New York City, like real pollution. Waking up this morning, coming to work, you can smell it.
Oh, yeah.
You can you can smell it.
And I noticed the dogs, vet bill and kennel, are just mental. Yeah, they're just, it's definitely there. We should point out the airlines, I don't have an update right now, but incoming flights, the last I heard, to LaGuardia and Newark were challenged, to say the least.
I saw some delays yesterday, particularly LaGuardia, for obvious reasons.
More on that as we start up the day. Let's continue on now, and we do so with Jeffrey Yu visiting with Paul Sweeney yesterday at his BNY Mellon conference in Florida, and has jetted up to join us. He is senior market strategist, BNY Mellon. It's a quiet period, but it's not a quiet period. I'm going to ask you an open question to start. Equities, bonds, currencies, commodities, where is your single focus now into the Fed meeting?
I think the single focus is we need to acknowledge higher for longer. My single focus is those residual Fed cuts that still seem to be the market is intent on pricing and heading into next January. Probably needs to get rid of them. Yeah.
We talked about the fog as being sort of a metaphor right now for a lot of the uncertainty that we have in the market. It's unfortunate and convenient. However, I do wonder how much this lack of conviction makes you have all that much more conviction in cash. Because if you could just sit there and earn something, even if you're not blowing it out of the water, it's better than nothing.
That's been the theme that we've observed in our flows for the best part of the last 6 months, if not longer. But having said that, there is one new dynamic seemingly coming through. Things are flatlined, so people are not adding to more cash because they're seeing that allocations are just so low right now to risk, and the institutional investors that we custody for, I think they're starting to push some funds in, not speculatively or opportunistically, but they're looking at valuations and they're looking at the growth environment. It could be a bit more benign than we give it credit for, so funds are actually being pushed back in.
In the next half hour, we're going to be speaking with Ed Yardeni, who's going to talk about the mother of all melt-ups, MAMU, as he calls it. And I'm wondering how much this positioning right now of an increasing amount of cash is actually being fuel for this mother of all melt-ups that could be coming?
I think it is going to be the fundamental asset allocation story for the second half of the year. But on top of that, the macro picture is, can we dare to envisage maybe a soft landing? Again, I was having a few conversations around this. If we can get to, say, year-end with still payrolls around 250,000, but core inflation, core PC on the way down to 4.5%, I think that is a good environment. That's a good result. So if that translates into the corporate profitability, stability, and earnings growth as well, then with the cash on the sidelines, your 1% or so real rate buffer. A few months ago, but that clearly is not the case right now. So there's got to be a governmental push, but again, encouraging the private sector that they can leverage, they can add to their balance sheets and move on accordingly. Because China's been de-risking, de-leveraging over the last 2 years.
To China, and it's, the last 24 hours has been just extraordinary. How do you treat the IMF's cautious 5-year view, even what OEC did yesterday? Do you just instantly say, I want to be suspect of that and take a contrarian, more optimistic view on global GDP?
Well, I think global GDP is reflective of where global productivity is, where global demographics are. China's own growth forecast, if we go back to March, when they came out with the growth targets to the MPC, that was considered conservative at the time, especially if we take into account the rebound and the rebalancing coming through. But then if that is a warning signal, then I think it gives the impetus for governments to spend, to invest, to boost productivity, to boost growth and get things back on track.
Leland Miller at China Beige Book is heated that the street has this wrong. He's far more optimistic of the domestic Chinese experience and says it will even come over to a Pacific Rim statement. Is this the mother of all opportunities we're missing?
I wouldn't say it's the mother of all opportunities, but given the last 3 years, China's always been an afterthought in terms of asset allocation because of lockdown, because of other factors. There is an opportunity set there as well. But having said that, going to the fiscal story, that's also one thing I deeply worry about globally right now. When the IMF and with Chancellor Hunt just upgraded reports for the UK, one thing Georgieva said was, please don't do additional fiscal stimulus right now. We've seen what happened in Turkey before the elections. We've seen what's happening in Poland right now. New Zealand, for example, pushing through stimulus. That's the last thing central banks need right now. To be honest, even the debt ceiling debate, maybe the fiscal consolidation, shall we say, was barely anything. So central banks, they need some help from the governments.
That was the most diplomatic way of saying they actually didn't make any progress in cutting any kind of spending whatsoever in the debt ceiling debate. Just sort of putting this all together, this is a time of mid-year reviews.
Yes.
And there were a number of high conviction trades in the first half that were absolutely demolished, annihilated. What are some of the conviction trades heading into the second half that you're concerned about? And I think about the conviction trades that you talked about of AI and long cash.
Right. So in terms of AI, do we want to think that is that you do have the growth story, you have the innovation story, but is there a Athena focus in there again? And I do have some cash allocations to push for. I will just go with the Athena theme. So I think that is one thing to bear in mind. But going back to my earlier point about Fed cuts need to be priced out, one conviction view that we have is this higher for longer narrative globally, and we're talking about potentially no cuts from major central banks at all until at least the second half of next year. Whereas that is not something that's priced in, I would say, the Fed or anywhere globally, because it's sticky inflation, persistent inflation, and fiscal is only going to make that worse. And we've got quite a few elections coming up globally over the next 18 months as well, and we love electoral giveaways on the fiscal side, don't we? So that's where curve steepening, bond yields, will we even be looking at, say, JGB 10 years at 1.5%? These themes are going to come through.
Hey, Jeff, that's interesting. Jeff, you there, BNY Mellon, looking forward to 18 months of politics and financial market volatility, potentially, TK. It's amazing to see the technocrats and the central bankers warn about fiscal stimulus. You hear it from the ECB as well. They're uncomfortable with the nature of fiscal support for paying energy bills now that energy is priced lower.
So my takeaway is, Jeff, you on the edge of Bullard. I mean, this is important, what Jeff, you just said here, about not extending out the rate cut derby now, but getting out into the second half of next year.
Of 2024.
Yeah, that's a big deal.
To Lisa's point, and we've been talking about this for weeks now in this program, we've just spent 6 months beating up on consensus positions. Coming into 2023, no one liked tech ripped. Coming into 2023, it was about rate cuts, had to price them out. 2023, it was about short the dollar. Then the dollar started to strengthen. Long Europe, long China. Europe, technically, can I call that a recession in Europe now, Jeff, with that revised data?
I think
Can I call it that?
The ECB would beg to differ for now, but let's see what the forecasts are in a week's time.
2 quarters of negative growth in Europe after the revised data. Q4, Q1. China, we're having, think about the China conversation. We've gone from reopening boom to China needs stimulus in 6 months.
The big fear that I have is that you get sort of a battle between central bankers and the fiscal policymakers, especially with these election cycles. If they keep coming out and saying, we have to keep spending to keep the population okay, and then central banks have to respond.
It's the point that Jeff is making. Ultimately, Tom, it can lead to high yields, steeper curves.
Or longer. The key thing
into
is
next year.
Longer, the time frame. Yeah.
Jeff, great to see you, buddy.
Likewise.
Just fantastic. I've missed you. It's good to see you in person. Equities just about positive on the S&P 500 from New York. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The mayor of New York has told residents to stay indoors or wear N95 masks if they go outside, as the most polluted air in decades blankets the region. And this as wildfires continue to ravage large tracts of forests in Canada, sending smoke more than 1,000 miles southwards. Prime Minister Justin Trudeau says it's the worst wildfire season in Canada's recorded history. House Speaker Kevin McCarthy called off votes for the remainder of the week and sent lawmakers home. A revolt by Republican hardliners halted business in the chamber for a second day. The blockade by a band of 11 ultra-conservatives heightened tensions among Republicans following the Speaker's backing of a compromise with the White House to avert a U.S. debt default. The Speaker says he was blindsided by the revolt. Coinbase CEO Brian Armstrong says the SEC started to change its tone in its questioning of the company last year before filing the lawsuit against the crypto exchange. He told Bloomberg that the firm had been forthcoming with discussions, but was unfortunately met with silence.
This was not unexpected. You know, we've been in discussion with the SEC for a long, long time. Even going back to before we were a public company, we started sharing with them how we operate our business, how we list assets on the platform, how we think about our staking program. And through a large number of dialogues back and forth, they allowed us to become a public company. You know, we had many discussions with them in the last year when their tone started to change.
This week, the SEC has widened its crackdown on crypto and has accused Coinbase of running an illegal exchange. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg. Young adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
The AIs have sort of dominated the long portfolio for 5 or 6 months. If it's as big as I think it is, NVIDIA is something we're going to want to own for at least 2 or 3 years, not for 10 months, and maybe longer.
Just an absolute clinic from famed legendary investor Stanley Druckenmiller there, not just on AI, but Tommy talked about long short, how he likes to play short because he enjoys it, but ultimately that's not where the money's made.
I rarely say this, but I want you to sit, folks, on the digital replay of this a good 20, 30, 40 minutes with Mr. Druckenmiller. And there's some interesting stuff in it and tangential political stuff and all that. He is absolutely brilliant on the mathematics of shorting, much like what I'm going to talk to Taleb about today. It is a required listen for anybody young on Wall Street about the entertainment of shorting versus actually not losing money at shorting.
Well, that's the point. He said, you go long, you can lose 100%. You go short, Tom, you can lose a whole lot more.
Jim Chanos would say the same thing, but there's some real high points within this conversation. Because of time, we're going to move on. Rishi Jaluria with us. He's with RBC Capital Markets, and all you need to know is Microsoft. He's truly expert on this. Rishi, I want to get away from all the blather on AI, ChatGPT. I'm hearing some real authenticity about ChatGPT. What's it mean on the income statement for Microsoft 5 years out? Which margin line are you focused on, and what will be the delta of improvement due to AI?
Yeah, and thanks so much for having me. Look, when it comes down to how this flows through to the P&L, the great thing with Microsoft is there's many different ways that they win, right? It shows up on Azure because of the commercial arrangement with OpenAI, helps on their entire product portfolio. Now you bring an interesting point, because I think there's the whole back end, and by utilizing generative AI themselves, you get all sorts of savings on R&D with significantly higher developer productivity, better sales and go-to-market, even some G&A leverage. But the one line it actually hits in a potentially negative way is on the COGS line, right, and your gross margin, if you're looking at it purely on a margin perspective, because the amount of storage and compute resources necessary for generative AI are significantly higher than what we see with traditional cloud workloads. However, there's also a dollar uplift. So if we're looking at this on purely an EPS or a dollar net income basis, all of this is accretive because there's so much more that Microsoft can charge for these generative AI-enabled workloads or any sort of technology that's embedded throughout the portfolio that utilizes generative AI. So this should all be accretive to EPS in the long term, even if it means a gross margin hit over the long term.
I get the idea there may be a revenue pop at the top line of the income statement, but if I got 68 cents on the dollar gross margin, 48 cents on the dollar EBITDA, what are those dynamics 3 or 5 years out? Have you been able to quantify that yet with all the hoopla?
It's still very early to be able to tell that. I will say our own models, the way we've kind of been thinking about this is remember, when we went from an on-premise world, we went from 90% gross margins to 75% gross margins, which is your average SaaS company. In reality, we may see a move from 75% gross margins to 60% gross margins across the board, but there's also this big, 2x to 3x uplift we saw from going on-premise to cloud, and I think we would see that similar uplift. So even if the margins end up actually being lower, although I think EBITDA margins may end up being flat at the end of the day, your overall gross profit dollars, your overall EBITDA dollars will actually end up going up a lot as a result of generative AI.
One thing that's sort of a distinguishing feature between the cloud, which is all sort of in the ether and sort of runs on energy, and that's sort of the physical reality of it, versus generative AI and ChatGPT is the physicality that we haven't yet imagined. What are some of the application use cases? And I think about, for example, the goggles that we just saw from Apple and how that might be the future of computers, of the personal computer. What are you envisioning in terms of the archetype of what we should be looking for to understand the companies that are going to benefit both on the hardware of it as well as the software?
Yeah, absolutely. And look, I think whatever use cases we can imagine for generative AI, especially as it relates to enterprise software, those are going to be very different 3 to 5 years from now versus what we're seeing today. So, we can only kind of scratch the surface of what's actually going to happen. But I think the bigger thing we have to take a look at when it comes to enterprise software is, you talked about virtual reality as being potentially the future of computing, and that's entirely a possibility. I think generative AI is going to be the primary way in which we interact with software over the next 5 years, right? It may take time for that to shift. We all remember what happened when we went from the command line interface to GUI, right? When we went from Microsoft DOS to Windows. And I think we're going to see that similar shift. And so when we're going to want to say who is really going to be a beneficiary of this, right? It is absolutely, Microsoft. I think that not only has software solutions that benefit from this, like GitHub Copilot, like OpenAI services on Azure, Office 365, but they also provide the technology that enables others to embrace generative AI, right? Especially on the Azure side of the equation, along with some of the hardware. You see that they're working on potentially building out a rival to NVIDIA's GPUs, just given how much demand there's going to be. It's hard for me to not see Microsoft as being a beneficiary of this in a big way that I still think is not even priced into the stock today. Now, if we want to go and say who else in enterprise software can benefit from this, I really think it's the large platform vendors that have a lot of data, have a lot of history with their customers, and have the use cases kind of already sketched out and seem to be moving fast. I would think about companies like Salesforce, companies like HubSpot, companies like MongoDB, that have that roadmap, but also have that touch points with the customers and their customer data that can really supercharge the way in which customers get value out of their platforms.
Rishi, you're talking about how you see why there's a buying opportunity. How do you even start to put valuation figures around some of these names? Do you just buy first and ask later about how this translates into some sort of market valuation?
I think that would be a trap if we did that. So fortunately, we're not doing that. We are absolutely trying to figure out how to quantify revenue uplift and ultimately, net income or free cash flow uplift, because profitability does actually matter at the end of the day. It's not just growth for the sake of growth. And so what we try to think about is a couple things. What can this drive in terms of additional monetization and uplift in terms of what you can collect from customers? What can this lead to in terms of competitive displacements? Where can we get some additional efficiencies on, throughout the P&L that leads to, additional profitability? And think about all of those sort of things, and that really quantifies what is the ultimate free cash flow uplift at the end of the day, and how does that plug into our DCF models? So absolutely, we try to quantify it. It may be too early, it may be a little bit, but I think we have to have that framework. Otherwise, if we're just buying something on AI hype, then we end up with situations like companies like Palantir that aren't actually even doing AI, and the stock has doubled over the past month just on hype, but not even figuring out how does this plug into your model.
Rishi, great to catch up. Rishi Jaluri there of RBC on the distinction between hype and actually making this happen. NVIDIA, that stock is up by 156% year to date. If you are just tuning in, plenty of disruptions to flights in the last 24 hours connected to the wildfires in Canada and the smog that we've seen come down through the United States, particularly here on the East Coast in the last couple of days. This from the FAA, inbound flights to LaGuardia grounded on low visibility. That headline just coming in. Inbound flights, Tom, to LaGuardia grounded on low visibility.
For those in the Northeast, and particularly on Bloomberg Radio, to the south is worse. There's no other way to put it. Central, southern New Jersey, and down to Philadelphia, where the numbers are truly unimaginable. There's different ways you measure this, but basically, New York City is unhealthy, and Philadelphia is hazardous. That's the sort of the language the pros use.
So if you are planning to fly this morning, expect perhaps some disruptions. The latest headline just coming in, Lisa. Inbound flights to LaGuardia grounded on low visibility.
And I believe the reports are that it's going to get potentially worse again throughout the day. Remember
Is that the report? I didn't see
when
that.
it was, and then it will get better
You nailed it yesterday.
as it sort of fades away. I will just say that the emotional impact, especially you talk about your dogs, on kids, on other people, people who have already lived through the pandemic, is pretty significant.
We had a school event canceled. The Yankees canceled baseball. Philadelphia Phillies, I believe, canceled baseball.
You emotional about the baseball cancellations?
No, the dreaded Yankees didn't play. That's always a good thing. But, the headmaster of the school sent a lovely note just saying, we can't do this, they're going to have a street thing or something.
Are the kids happy with that?
The kids don't care.
I was the kind of kid who would have been happy
with that. They're so on to summer.
I'd have been thrilled by that. Cancellations, love that stuff.
Do you have homework? Yes. You're going to do it? No. Okay, great.
Clearly, move on. That's the way it works at school, isn't it?
I feel it in the top of my mouth. I'm definitely...
You can taste it.
I can taste it, yeah.
I'm here. I hear you.
Tang is not helping us.
No, I doubt it. Ed Jardini, if you had any research coming up shortly, he's constructive on this equity market. We'll get to an equity market bull in just a moment. Your equity market right now going absolutely nowhere. From New York, this is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Absolutely think that growth is going to slow from here.
You have, we believe, a slowdown coming, potential recession.
Inflation, it's coming down, but it's going to remain elevated.
The reality is there's just a lot less upside left in this rally and potentially meaningful downside.
We do think something else will break between now and year end.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
These smoke-related disruptions continue this morning from New York City. Good morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market just about unchanged on the S&P 500. The latest news in the last 10 minutes or so, the FAA saying that inbound flights to LaGuardia have been grounded on low visibility. Saw a little bit of this yesterday. The FAA slowing flight traffic into some NYC airports. Tom, saw that in the last 24 hours. Understand that Philadelphia International Airport, similar story.
Philadelphia, I'm going to suggest worse. Washington, a little bit better. We've got Ed Yardeni coming up. He's 40 miles outside of New York. He's in better shape than we are. It's very variable. Not zip code to zip code, that's too narrow, but almost county to county. There's a real variability here. It's not just like a malaise.
I've not got more to say.
No, that's my weather thing. I'm tossing back to you so you can give us a 5-day. So you can give us a 5-day forecast.
I was going to say it's just been phenomenal to experience. Phenomenal. You step outside, the eyes are burning. You can taste it in the air. Elisa, we've seen the last couple of days, these wildfires just paint the sky orange here in New York and beyond.
It just feels like yet another sort of global crisis hitting the New York City area. And I say this as a native New Yorker. It's just one of those moments where suddenly there's sort of an eerie calm. There's a silence. People aren't exercising outside. People are all wearing masks again. Things slow down. And I think that that's kind of a visceral response in addition to burning nostrils in the back of your
I
throat.
have a new respect for Delhi. Quick story. I'm in Shanghai. I got to go.
They live this every day.
I got to go. Yeah, I go 70 miles outside of Shanghai to a town I can't pronounce, and cash flow. I go, what's the town like? And he goes, it's one of China's 14 Pittsburghs. And it's a manufacturing place in that. And in the hotel room, fancy hotel, they had one of the gas masks the weather people in New York are showing right now with the things out to the side. And I've got a new respect here for what Shanghai lives every day with a rating of 80 or 90 or 100, or Delhi at 160, and this morning New York at 223, and Philly worse than that.
Hopefully in a couple of days, this will pass. That's the latest. If you are just tuning in, the FAA saying inbound flights to LaGuardia Airport grounded on so-called low visibility. Just look outside the window right now in New York City and you can see the lack of visibility. Let's get to the broader equity market price action on the S&P 500. Just slightly negative on the S&P, just a touch lower, softer. Yields a bit higher, a whole lot higher yesterday, higher by a single basis point this morning. Lisa, 380.89 on a US 10-year.
That really is the theme for me, especially as we look around the world at global yields generally rising in response to a 1-2 punch from the Bank of Australia and the Bank of Canada, the Reserve Bank of Australia. 8:30 a.m. initial jobless claims. Very much curious to see whether we do see a material tick up. If we don't, how much do people start to price in an active Fed next week, that they still are potentially going to raise rates despite the skip, jump, whatever you want to call it, talk? Today, the Bloomberg Invest Conference continues. Our own Tom Keene will be speaking with Nassim Taleb, probably around 10:30, 10:35 a.m. Eastern. Don't miss that. Goldman Sachs' John Waldron, as well as Katie Koch of TCW. And at 4:30 p.m., a lot of the rate hike discussion really centers around how much the banking crisis is over. Very curious to see that in the data that comes out at 4:30 p.m. with respect to discount lending, as well as just generally with respect to the balance sheet that's come in.
Want to watch a little bit later on this afternoon. Lisa, thank you. Ed Yardeni joining us now, the president of Yardeni Research. Ed, I've loved the notes over the last couple of weeks. The mother of all melt-ups. Ed, are we closer to a melt-up than a melt-down?
Well, I think we've definitely had a melt up in the mega cap 8 stocks, as you've been highlighting. These stocks have kind of taken over the market in recent weeks. I think it really started with the banking crisis, right? In March 8th or so, when we started having the banking crisis, the financials took a dive. Even energy took a dive on fears that if the financials are going down, that can't be good for the economy. And the energy stocks went down. But people still wanted to be in the market, and they ran into the mega cap 8 because they have cash flow, and they have good business. I think the market's actually going to broaden out back to the financials. Right now, we've got some uncertainty, concerns about whether there might be another rate hike, but I think the economic outlook is still pretty good. And I think once people get more comfortable with the financials, I think the market will broaden out in that direction.
Ed, I want to give a look back here quickly in a victory lap for you. You've had a set of victory laps over a lengthy career. In October, Ralph Ancampora and Edward Yardeni said, climb on board this bottom in the market. You're up 19% from your October low. The triple leveraged Yardeni fund, this is something in develop right now, is a 57% return since October. Okay, yeah, that's before Yardeni takes out his 2 and 20. But the answer here, Yardeni, I want you to talk to people who missed it. They didn't listen to Ralph Ancampora. They didn't listen to Ben Laidler. They didn't listen to Ed Yardeni. Talk to the people who miss this rally, how they get on board.
Well, I'm still optimistic that the market is going to move higher by the end of the year into next year. I think next year is sort of the environment that the market is increasingly thinking about discounting. And I think the economy is going to be better. I think earnings are going to be better. However, we have had a heck of a move, and it's been in these large cap stocks. I think, as I said, look for where there's been laggards, and there certainly have been laggards in the financial. There have been laggards in energy, even in industrials. In addition to the melt-up scenario, for mega caps, I've also been monitoring the situation for construction in the United States, and it's absolutely booming for non-residential construction, and I think it's about to boom for infrastructure spending. And so I think the industrials are another place to be.
You were saying that the 4,600 target that you currently have might be conservative if this all bears out. What do you say to those who push back and say, if that comes to pass and all of the people who are in cash decide it is the time to throw in the towel and go into equities, that will give the Fed more ammunition to hike rates further and kill this off more quickly?
Well, I think the Federal Reserve, Federal Reserve officials have been saying for quite some time that they want to get the interest rate, the Fed funds rate, up to a restrictive level. I think 5.25% is proving to be restrictive. There has been a banking crisis. We have seen surveys of loan officers saying that they are tightening lending standards. So I think they're where they wanted to be. And I think they have to factor in that quantitative tightening, as well as the tightening of lending standards, probably amounts to at least another 50, 100 basis points in effective federal funds rate hikes. So if the funds rate now is 5.25%, I think effectively it's already at 6.25%.
But if that's not enough, Ed, to slow any kind of growth, and you are seeing construction companies actually seeing a boom, you're seeing the housing market reignite, you're seeing all shoots of possibly some sort of recovery in manufacturing sectors that have been beaten up. Doesn't this go against the idea that it is enough, that it is restrictive enough to bring about a decline in inflation to the degree that the Fed would like?
Well, inflation has been coming down, as you know. Maybe it's not coming down as rapidly as some people think, but I think it's proven to be quite transitory in durable goods and even non-durable goods. Where we still have stickiness or persistence is in services, and we know that rent inflation in the real world has come down pretty dramatically, and that's likely to mean that we get down to something like 3 to 4% inflation by the end of this year. Right now we're about 4 to 5%. So I'm optimistic that inflation can can come down very well on its own without any more restriction. I think a lot of the inflation was pandemic related. It was a shock. There have been aftershocks, and I think we're sort of normalizing.
And Giordani, you talk about a broadening market. Help me with packaged goods. Some of them are trading at 19, 20, 21 times earnings. Am I supposed to acquire new shares in those companies? I mean, I'm just dazzled by the idea of buying new shares at a 21 multiple that's got a low single digit revenue growth.
You know, the bears have been certainly right about the fact that we have really never seen a situation where a bull market got started with multiples basically at fair value. The forward PE of the S&P 500 was 15.1 on October 12th when the market bottomed, and that is troubling to a lot of people. But the reality is, if you take out the mega cap 8, which are unusual stocks, you get a multiple of about 16. So again, it's closer to fair value. Whereas with them, you're at 18 and a half. So I think you have to really kind of slice and dice the stock market and look for where the value is right now. And as I said, it's beaten up financials that seem to be pretty good values. Industrials, I don't think have discounted with plants in the United States, battery plants, and so on. So I think there are still opportunities in the market.
Great to catch up, Ed. What a call. Just to be constructive so far through this year. Remains constructive. Ed Giardini of Giardini Research, talking of the financials. Check out the post-SVB low, what we've done on the NASDAQ, on the S&P 500. On the NASDAQ from the post-SVB low, NASDAQ 100, 20% gains. On the S&P 500, 10% gains.
What are the banks done? You follow it more than I do, but are the banks really, the regionals, have they really broken out?
No,
still a struggle.
Still a struggle. It's been a struggle. Yeah. There's a lot of people, Tom, who just think that at the moment they're going to struggle because the headwinds around profitability are going to be difficult for the time being.
To the weather, 30 minutes ago, the Washington Post Weather Service says Washington is worse than yesterday. That's their language. And they also note to the northeast, to Baltimore, and up to Philadelphia is hazardous, just for those driving, traveling, and thinking of moving today.
Do you want a big story? This from the Wall Street Journal just in. This is fascinating. China and Cuba have reached a secret agreement for China to establish an electronic eavesdropping facility on the island.
Oh, that will be...
That, according to U.S. officials,
sort of news
familiar with highly classified intelligence. That story I just moments ago.
The memory of my parents hiding the newspapers during the Bay of Pigs. They did not want little Tommy and his sister to see them.
To scare you?
That was the tension. I clearly remember feeling the tension, but they used to hide the newspapers. I'm not equating this to Bay of Pigs. I would never do that. But we're in morning TV, so you can do that.
You just did.
Thank you.
The Wall Street Journal saying that Cuba to host secret Chinese spy base focusing on the United States. We got Anne-Marie this hour.
We have. Is she here? Is she in person, or is she?
I believe she's still here.
She's going to make an appearance.
She hasn't left.
Right.
And because we've got these flight disruptions, maybe she'll never leave.
Yeah,
maybe she's stuck
like
in.
Hanging with Aaron Judge.
I can see just entered the studio. Got to wait for the commercial break here, mate. You can't do that.
She went out to
against the
Yankees
rules.
to see the game last night. She hung out with Aaron for hours.
AMH around the table in about 5 minutes' time. City's Kristen Bidley joining us in a little bit as well from New York. This is Bloomberg.
Up to date with news from around the world. With the first word, I'm Lisa Mateo. Bank of America's Chief Executive Officer Brian Moynihan says that higher capital requirements will impact lending, following reports that large U.S. banks may have to boost their capital by an average of 20%.
The best news about this whole dialogue is they've got an agreement that extends a period of time, so we shouldn't have to deal with this for a while, which is really critical because the United States has to be the beacon of stability, strength in the world. And at times when this discussion's going on and you travel the world, everybody gets fixated on it because the United States is the benchmark of benchmarks. And if it goes kapooey somehow accidentally, it's a real problem. And so they get all fixated and all this sort of activity into planning for it, what would happen to all our company. It would just be better if it didn't go on.
Moynihan spoke with Bloomberg's David Weston at the Bloomberg Invest Conference in New York. Kim Kardashian says she's looking forward to the relationship she's building with the other founders of Sky Partners.
I'm honestly most looking forward to my relationships with the founders. I'm really fascinated to hear their backstory. I'm a storyteller. I'm so excited just to have the opportunity to help them win.
Kardashian presented her debut private equity fund to a crowd of curious investors in Berlin at the Super Return Conference. I'm Lisa Mateo, and this is Bloomberg.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We've got to address how do we make sure
We do everything we can to help Ukraine win, but we also have to make sure that we're not wasting dollars. We're going to have $35 trillion worth of debt in 2 years. We got to make sure Germany and France do more than their fair share. Can't just be the American taxpayer that's paying for this. Let's look at lethal aid that's going to help them, Ukraine, win, not just have another prolonged war that goes on forever and ever.
Feels like the latter at the moment for the Ukrainian people, that's for sure. The Senator Rick Scott of Florida on Bloomberg's balance of power just yesterday. From New York City this morning, good morning to you all. Let's check in on the price action on the S&P 500. Equity futures just about negative. Let's call it unchanged at the moment. Yields just about higher by a single basis point, 380, much higher in yesterday's session as we get another surprise rate hike this week. The first from Australia, the second out of Canada. Plenty of surprises out of Canada over the last couple of days. The wildfires painting the sky the colour orange over the last couple of days, Tom. The latest news from the FAA in the last 20 minutes or so, the inbound flights to LaGuardia have been grounded on low visibility, Tom. They've been slowing the traffic into New York City airports over the last day or so.
I think, well, with the sunrise, we're going to see a lot more of this. There's no question about it. We saw it yesterday. I believe Newark at one point was limiting incoming. I saw one tweet. I'm not sure the date is. Right now, Newark across America is 28 minutes delayed incoming, but we're going to see much more of this. And Lisa, you nailed this yesterday, saying it's a movable feast. And as a general statement, it seems to get worse in the afternoon. Is that a theory we can run with here?
To be clear, I am not a weather expert. I was just reading the reports that it was saying that it was coming in and settling as the afternoon went on. There is a real question, though, about sort of business disruptions, especially if people are not able to be outside in schools, even cancel some of their events and their classes.
I think what's important here, John, and I want you to bring in our next guest, she's so special here, is you get out the map, you get out Google, and you look at Taiwan, and you look at the distance to China, 100 miles, 105 miles, who's counting, whatever, you like Strait of Hormuz, Persian Gulf.
Sure.
And the distance of Cuba, and it can vary here, but it's 260 miles to, it depends which part of Cuba you're looking at. But the answer is that's going to be the equivalency about something that's going to be talked about nonstop today.
The story just breaking moments ago from the Wall Street Journal this hour that China and Cuba have reached a secret agreement for China to establish an electronic eavesdropping facility on the island of Cuba. That, according to U.S. officials familiar with highly classified intelligence. AMH jumps into the studio, into the hot seat. Good to see you, Anne-Marie.
Good to see you guys.
What do you make of that?
Well, I think it's concerning for the U.S., given the proximity of Cuba to the United States, and potentially what does this mean for China? That means they could potentially monitor things like phone calls, like emails, like satellite transmissions. So obviously U.S. officials would be very concerned about this because this is China exerting more power very close to the U.S. border.
Complete unfair question. Does it derail the trip of the Secretary of State to China?
I don't think it derails the trip at this moment because, remember, they are desperate, the Biden administration, what it feels like with all of these overtures to have invitations to sit down with their counterparts to make sure they are at least having dialogue.
Does China want to sit down with us?
I think China does, but they're using this, of course, as leverage. And it's very awkward for China to say yes to some U.S. meetings when, say, there's a new export control ban on them, when they're hearing the G7 in the United States talk about not decoupling exactly, but de-risking, and that they're going to go forward with an outbound investment restriction. So right now, Secretary of State does plan to go. He would be going in the coming weeks. And we should remember, he was always going, even when U.S. officials knew there was a spy balloon flying over continental U.S. The trip got derailed because the optics became so toxic when it became public.
Well, this to me is one of the most fascinating moments of this political cycle, that politically, among the people, there is this feeling as hawkish as you can get good on China, right? And then the politicians, particularly the Biden administration, is trying to soften things a little bit to get some breathing room. How much can they fight against that, right? I mean, how much is the Biden losing if they do seem to just sort of shrug off the creation of a secret spy facility in Cuba?
Well, this gets very difficult, especially going into 2024, because every presidential nominee who wants to be the Republican candidate is going to be asked about China, and every single one of them is going to be as hawkish as the next. Or you're going to go to the Capitol Hill and talk to those individuals on the China Select Committee who want to be very hawkish. The Biden administration, their actual deliverables on China have been quite hawkish, right? We've seen more from this administration than we've even seen from the Trump administration. The tariffs were kept in place, but at the same time, At the same time, you'd be hard-pressed to find anyone in Washington who's want to take a tough stance on China. You'll also be hard-pressed to find anyone that wants to go to war with Beijing. So the Biden administration at least wants to have some sort of dialogue and rhetoric. Look, the two defense chiefs of these two countries couldn't even sit down in a room together. There was a cordial handshake, and then it was back to barbs.
Extra headline this morning. Inbound ground stop or delays also possible at JFK and Newark. That coming from the FAA, Tom, just seconds ago.
She's got the Gulf Stream. I don't know. She goes out of Teterboro or Middletown to the west. I mean, I don't know if it affects Anne Marie.
That's on the latest from LaGuardia as well. So if you are just tuning into the program, here's the latest from the FAA this morning, just on some of the potential flight disruptions. Inbound flights to LaGuardia grounded again on low visibility.
McCarthy heading out the door based on these 11 ultra-right Congress people.
So the ultra-right are not saying we want the minority Democrats to run the show. What they are saying is that we want more power and leverage over the speaker.
They don't have power. There's 11 of them. That's not power.
No, but what they're saying, and this is what Speaker McCarthy will tell you, is that, these 5 to 11 individuals are trying to hold the entire Congress hostage to get what they want out of him. And he had negotiations with them last night. All of this goes back to potentially what promises were made during the 15 rounds of the speakership early on in the year. And then, of course, all of them, these 11, are very upset with how the debt negotiations went down. They don't think the caps on spending was enough. They want to see more. And at the end of the day, you did have more Democrats, though, vote for that than Republicans. So that plays into their hands.
Is this Scalise of Louisiana just trying to do an end around McCarthy, knock him out the door, and Scalise takes over? I mean, it's like I'm trying to be inside Washington baseball.
We are not there yet, but I will say this. Punchbowl News did have an interview with Steve Scalise, and how he responded to the current state you have from Jake Sherman is it's not good. He said, I don't know what the promises were. I wasn't part of that, so I still don't know what those agreements were. Whatever they are, conservatives feel the agreements were broken. That's got to get resolved. Hopefully it does. Obviously, tale of old time in Washington. At the number 1 and number 2, obviously there's some friction.
This is on the edge of Liz Truss. It's positively British.
It's kind of like John and Tom.
Kind of like that. Is that what this is? TK, why are you surprised? It's politics.
No, I'm not surprised. We saw it with Ryan. We saw it with Boehner.
Fringe Democrats running the White House? Hasn't that been an argument for the last 2 years?
No, I don't. I think
you
there's
don't
a wide
think that?
understanding.
I think there's a lot of people who believe that in
Democrats.
Washington, D.C., there are fringe Democrats that are basically in charge of who gets hired to the White House, who gets hired into the government and this administration.
That is a thinking amongst many in Washington, D.C., especially during the first 2 years of the Biden administration. Obviously, you're going to see him want to move very much so to the center. Aaron Judge is still in recovery mode. Hopefully, we'll be beating the Red Sox on Friday.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From the Wizards and Capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg.
August 20th, I can get you tickets for New York Red Bulls versus DC United for $25 each. You go a couple of weeks later, August 26th against Inter Miami. And those tickets, Tom, those tickets start at several hundred US dollars. Right. The difference that one man can make to a sport
Somebody once
in America.
told me, when you see these kind of announcements, just the gate helps pay for it.
Just amazing.
The piece they get on the action is
just amazing. Of course, we're discussing Lionel Messi going to
explain
into Miami.
Take a moment here and explain not why he's the best guy in the world, but why he's still so dominant at his age. Is he like when Beckham came over here, or Wayne Rooney, where he's older? And
no, he's older. It's coming towards the end of his career. He's slowed down. He's not as prolific in front of goal, but clearly he's going to be the best player in this league because the gap in terms of talent between what happens in Europe and what happens here is still incredibly wide, and they're trying to build the game. He's just an incredibly talented football player, and you could see it as soon as he burst into the team at Barcelona as a teenager.
Oh, yeah.
I remember seeing it. We all saw it. There are certain players that come along, they step onto the field, you watch the way they move, the way they receive the ball, the confidence they have, the way they move towards goal. You know, sometimes, Tom, players burst into a team, they get the ball, they're scared of it, and they pass it back immediately. This guy was nothing like that. You just knew almost immediately that he was special. Just like that, just one touch on the ball.
The money that's going into this transaction, is it money looking for an international exposure or an American exposure?
Both. And I would say more so in the United States to begin with. We've done this experiment before with Pele back in the 70s. Did it with Beckham in the last 20 years. Yeah. This is different, though. It seems to be building on everything we've seen over the last couple of decades. You think about the deal that Michael Jordan did with Nike all those years ago, which I have to say that Matt Damon and Ben Affleck have done a wonderful job putting it into a movie over the last 12 months, Tom.
You
think about the profit-sharing deal, the revenue-sharing deal they did with Nike and selling sneakers. Just the very idea that now we might have that, reportedly, according to The Athletic this morning, we might have that with Apple TV. They sell these season passes for Major League Soccer, and you might have this profit-sharing agreement with Lionel Messi. That's how big he could be to subscriptions to the game, which is why I also bring up the ticket prices this morning, Bramo, because that's the difference he can make. You can charge $25 at the gate, or you can charge several hundred just with one player joining the roster.
The Taylor Swift effect. I mean,
Big
basically,
time.
this is a rock star coming and going to make it a really significant thing. What I find interesting is that this is competitive with the Middle East money that's been coming into the sport. And this is a direct rebuff, really, to them saying, we'll pay you $400 million to come on board with us, saying, no, thanks. I want to have a stake in this.
Adidas might have a move to bank here as well. We're going to get the details of this in the next couple of days, the incoming weeks as well. And Lisa, to your point, we'll work out just how prolific this deal could be for him, both from Apple, from Adidas, and that's before we even get into wages from Inter Miami, whatever they are.
Yeah, but at this point, though, how much is it interesting to you? And I'd ask you, because I am no expert in this whatsoever, but David Beckham running this team, that the two of them are teaming up to kind of create a new
his career and wants to do something new and build a new legacy. That's the football stuff. We're going to catch up with Alex Webb a little bit later on Apple. I think that deal with Apple TV is something we all need to take a closer look at and what that could mean for sports going forward. If you're LeBron James and you think you're it in the NBA, you're Aaron Judge at the New York Yankees and you think you're it, do you want to share of that kind of stuff as well? I'm sure some people do. Equities right now on the S&P 500 look a little something like this on the S&P. Futures slightly negative on both the S&P and on the NASDAQ as well. Into the bond market just quickly, 2-year, 10-year, 30-year yields up yesterday off the back of the surprise rate hike from the central bank in Canada. 380 on 10s, 456 on a 2-year. And in Europe, well, I call it a recession. I know some politicians don't like to call it that, but 2 consecutive quarters of negative growth in the Eurozone just about for Q4 and Q1. The Euro, Lisa, just north of 107.35.
I love the recession or not recession discussion. In the single mover name, I'm really curious about what we've seen over the past few sessions, which is the smaller regional banks. We have seen a revival of them in a pretty significant way. If you look at the KBW Regional Banking Index, it's up 22% since May 11th. And you can see right now, Western Alliance up almost 2%, PacWest up about 4%, U.S. Bancorp along for the ride. Just interesting, again, that people are talking about rate hikes, people are talking about the potential for more dynamism, and people are writing off the banking crisis. Also, just to stick on sport, Manchester United shares, if you take a look at those, they are popping as a result of the 5th bid from Qatar's Sheikh Jassim.
It's been going on forever.
It's been going on forever. They were up a lot more earlier. They're up 2.3%. I wonder how much this is Man City's wins basically coming in, people getting really sort of negative on them. How does Manchester United push back against it? I mean, this is really the story as the Middle East and frankly oil money comes in and dominates a lot of the major sport in a big way.
I think there's a hope from both shareholders and Manchester United fans alike that they take the highest offer and they get rid of the club, and I'm talking about the Glazers, of the Tampa Bay Buccaneers, right? There's a hope that they just step away. There was a fear that they hold on to some kind of minority stake and hang around, and this one's been dragging on for months. I've been waiting for the conclusion for this for a long time. I can guarantee you one thing, we will get jobless claims in about an hour. Coming up in about 55 minutes from now. Looking ahead to next week, CPI data on Tuesday, ahead of the Fed decision on Wednesday. Christina Campmany of Invesco weighing in on some of this, saying, we believe the more optimal and palatable path for the Fed is actually to hike in June and then more clearly communicate they're comfortable with the level of restrictiveness at this point and want to wait a full quarter to access incoming data. So, Tom, it's kind of data dependent, but not. Sort of data dependent over 3 months instead of every month.
And to recalibrate here into July and to the end of the year, given the mysteries out there, Christina Campmany joins us now, Senior Portfolio Manager, Global Debt at Invesco. And the note, it's not that your note is ambiguous, you're just waiting for the data to come in like everybody else. Do you manage now for coupon or for total return?
I think with the Fed, look, they've changed their messaging, and we've always kind of been in the camp that I think the bar is for them to go in June unless data changes, and I think the messaging in the last 2 weeks has shifted that, and I think the message is that in some sense it is more palatable, especially if you look from a global central bank, because as much as the Fed doesn't want to be the central bank for the globe, in some sense they are, and especially for these emerging market central banks who have moved proactively and moved early and want to adjust, they feel like they're handcuffed by the Fed.
What is the duration bet on price up or price down on global debt?
Yeah, so I think treasuries kind of look fair here. I think it's a range-bound market. I think what looks interesting in the U.S. is actually TIPS. Real yields, 5-year real yields are at 170. I think that looks interesting both. Like, we don't view this hard landing deep recession camp, but it actually should perform in that environment as well. And now at 170, I think that provides a good place to park some duration because we have moved a lot. We are closer to the end of the Fed cycle than the beginning.
How disruptive would it be if the Fed did not skip and they actually raised rates next week?
I think that is, in some sense, the more palatable option. A week ago, we were priced for that, and this change in language from pause to skip and trying to communicate that a pause isn't a permanent on hold and cuts are imminent. But I think it's more disruptive for them to not go in June and go in July. You have 5 or 6 weeks of data. You don't have materially more information on what's happened tightening-wise from the banking sector. You have one payroll and one CPI. Like, do you really have a lot more context about the market in that period of time? That's hard.
Does it make sense to you to both see the Fed hiking next week and also be bullish on credit here, be bullish on risk, be bullish on the idea that this economy has momentum, even if it means the Fed's going to be more aggressive?
In terms of, is the Fed bullish on credit and risk,
Whether
or the market? So I think for us, the last 9 months, and maybe almost we're approaching a year, the market has imminently looked for this slowdown in growth, slowdown in the consumer, a look for payroll, job creation to imminently fall off, and we haven't seen that. The consumer has been robust. And I think what we find is in a easing cycle that passes through to the market much more quickly than it's passing through in a hiking cycle. So there are lags, and we need to be able to transition from just looking at concurrent data to assessing these lags. And I think, again, it still is this data dependent. And Jonathan, you've said this before, like saying it's data dependent is silly. It's always data dependent, of course.
But are you basically saying that it's too soon to go into some of the higher risk securities?
So when we look, we'd prefer macro risks rather than credit product. And I think like within the credit product, mortgages look interesting because of where they are, and there's a short rate vol bias. We'd be more biased up in credit, within credit, so IG over high yields. But I think the more compelling lever that we see are the macro levers, and probably FX the most over rates even.
The reality for our listeners and our viewers is not a lot of data dependent forward looking by strategists and all that. The reality is they're down 17% from the good times in bonds, and they've come back maybe 6%. We had somebody in the other day that said 80 is the new par. Do we need to reset our bond view, thinking that we're not going to get back to the glory that we knew a number of years ago in price?
Yeah, I think it's a different world. I think we're in a world with higher inflation, and we've reset. And I don't think the 30-year, 35-year bond rally that we had in one direction
I got to make some news here this morning. Is the 35-year bond rally dead?
I think we're in a different environment. I think the risk is that inflation is here to stay in a more meaningful way. And that doesn't mean the 8-10% inflation. We've obviously come down, and we have CPI next week, but we're still talking, even if you're talking 0.3 risk or 0.5 versus the 0.4 consensus, you're still running at 5% headline and 5.5% core. Like, that is not the Fed's goal.
Above target inflation, here to stay for a while maybe. Christina Campmany of Invesco, really revealing, listening to the former Fed Vice Chair Richard Clouder this week over in Newport Beach, California, catching up with him at PIMCO, talking about accepting 2 point something. That's a real change, talking about accepting 2 point something. The
something word, 2.x.
Whatever the something might be, and just sitting there and saying, this is where we are. We want to get back towards 2, but just carry on forecasting we're going to get back towards 2 without actually being back at 2.
They had a brilliant symposium at the Dallas Fed, I'm going to say 10 years ago, for John Taylor, and it's real simple. First of all, it's not 2%, it's 1.x% is where we've been. So you blow through 2, and if you get declared as new level, you're a stick above at 2.6, 2.8. Is that where we're heading? That's a huge debate.
I remember the morning last year, Matt Lazzetti at Deutsche Bank comes out early and calls for a U.S. recession, and he hasn't changed that call since. We'll talk about the date, the magnitude of it. We'll catch up with Matt in about 50 minutes' time. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Some 230 square miles of Ukraine's southern Kherson region is underwater 2 days after the destruction of the Kakhovka Dam. The regional governor says almost a third of the flood zone, where thousands are being evacuated, is held by Ukrainian forces, while the rest is in Russian-occupied territory. Kyiv is assessing the humanitarian, economic, and ecological damage of the disaster that Western leaders denounced as a war crime. Uber Technologies wants to cut emissions to zero by converting its entire fleet of cars to electric by 2040. But to do so, Uber CEO says the ride-hailing giant will need support from both drivers and riders.
Teslas are the highest selling cars in terms of electric vehicles by a mile. At the same time, we're not, we want electrification to happen. And that's not just going to happen with Tesla. We need Fords out there, GMs out there, Toyotas out there, et cetera. We need all these other players to go electric.
President Biden has vetoed a bill initiated by congressional Republicans that was designed to repeal the administration's student debt cancellation plan. Biden's executive action would forgive up to $20,000 in federal student loans for some borrowers. But the battle is far from over as his plan still faces justices in the Supreme Court. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
One conviction view that we have is this higher for longer narrative globally, and we're talking about potentially no cuts from major central banks at all until at least the second half of next year. Wow. Whereas that is not something that's priced in, I would say, the Fed or anywhere globally, because it's sticky inflation, persistent inflation, and fiscal is only going to make that worse. And we've got quite a few elections coming up globally over the next 18 months as well, and we love electoral giveaways on the fiscal side, don't we?
What an amazing conversation with Jeff Yu there, Senior Market Strategist at BNY Mellon. The electoral risk around fiscal policy, and that risk is something the central bankers might have to be focused on in the coming 18 months or so. From New York, welcome to the program. Flight delays expected across airports in the New York City area, including in Philadelphia as well. Look out for that across the country. The latest news a little bit earlier this morning that flights were grounded at LaGuardia. Plenty more news since then. Elsewhere in the market, not much news to talk about, I have to say, at the headline level on the S&P 500, just a little bit softer. Continuation of yesterday, just a little bit in the bond market. Yields higher by a single basis point, 380.70 on a US 10-year. Surprise rate hikes this week, Australia, Canada. Teeing us up for next week where we get a surprise out of the Federal Reserve. The Federal Reserve and Chairman Powell does not like to surprise. Let's see if they do just that next week. Citi's Andrew Hollenhorst is sticking with it, still thinks a hike next week. Let's see if they drop that call or stick with it after CPI on Tuesday morning. One story we need to discuss this morning, though, Tom, is just this phenomenal deal between Lionel Messi, one of the greatest, if not the greatest player ever in football, and Major League Soccer, and into Miami. Into Miami.
Single sentence here for those that really don't follow this, and the kids walk by me with the Argentinian shirt on, the white and blue stripes, and I guess I get it, but I don't. You mentioned Pele earlier. That was from another time and place. Multiple sources involved in or briefed said earlier this week that the American Soccer League and Apple have discussed offering Mr. Messi a share of the revenue generated by, I can't believe the detail, new subscribers to the MLS Season Pass, the streaming package, on Apple TV Plus. You mentioned this before, but to see the language, John,
That's
is even
amazing.
more shocking.
They've got a $2.5 billion 10-year deal with Major League Soccer. I'm talking about Apple TV. And clearly they think this can go some way to generating real subs.
It's a whole new world after all, because, I mean, betting was banned until a number of years ago now. And in baseball pregame, they're literally giving you the odds of how badly the Red Sox will lose in a given night.
We need to talk about the business of this. We can do that with Alex Webb over in London. He joins us from Bloomberg in the city. Alex, let's start here and focus on the business. How big is this deal for Lionel Messi, and what kind of precedents are we setting here?
Well, we should say they haven't actually signed a deal yet. It's almost like an MOU, right? They intend to sign a deal. They're working out the details. But yeah, the reports are not only that Apple could do some sort of revenue sharing deal on the new subs that come to the MLS ticket pass that they offer through Apple TV Plus, also through Adidas, which is already the boot sponsor for Messi himself, that they might also do some sort of revenue split. They make all the jerseys in the MLS. It is potentially a massive deal if he gets a slice of all that. There has sort of been precedent for this before. When Beckham joined the MLS 15, 16 years ago, he got the opportunity to buy a franchise, to get franchise rights for $25 million was reported at the time, at an undefined future date. When he finally did it a decade later, franchise rights were selling for $300 million. So he automatically converted a $25 million stake, tenfold. So they are quite canny in the MLS at finding ways of attracting these big players without massively breaking the salary caps that some of these teams have.
There's a distinction here, though, with Apple, with this idea that one of these streamers, one of the distributors of the sport, is having an active role in helping foster who will be playing on the field, who will be in their roster. How much is that going to be something of a template versus a one-off for some of the streaming services that want to get in on the sport that is capturing the eyeballs and possibly the one thing keeping afloat the traditional sort of plug-in media?
I think Messi's pretty much an exceptional case, as John quite rightly said. Many will argue he's the greatest player of all time. I think that a lot of other people would struggle to say, I want the same deal as Messi, and it might be laughed out the room. What you might see is in other sports, right? In other sports where streamers have rights, whether it's UFC, whether it's something else, that they will try to get a chunk of the gross. Right. Also, that they might make little documentaries. They might make a documentary about a given player that then also gives them a cut of some streaming dollar. Apple TV Plus has got a Messi documentary that clearly Messi himself is benefiting from. So there's a slice of a template there. I don't think anyone else is going to be getting exactly this deal.
Alex, James Knowlton over at The Guardian did a nice summary, I'll say 2 months ago, of how MLS in America just really hasn't cut through. Do you look at this, and I mean this within all of the Alex Webb media analysis you do, is this just rich guys playing, or is there a legitimate league out there that people will care about?
I think MLS is starting to reach an inflection point. Like, I did some analysis a few months ago where you're looking at that franchise value, and actually, if the pace at which the franchise rights value is accelerating, you tally that against the pace at which rights in NHL, which is historically the kind of fourth biggest major league in US sports, MLS is on track to overtake it within the decade, right? So it is really starting to nibble at the heels of NHL. NHL is still quite a bit bigger, has more games, that obviously helps it, but this is a real business.
John?
And one final thought on this is that unlike other soccer leagues, because there's no relegation or promotion, there's a revenue sharing, there's broadcasting sharing pretty evenly, it is a lot safer an investment than buying, for example, Manchester United, right? Because you have a far better visibility into the earnings profile in a few years' time.
Did Alex Webb just announce that Manchester United is getting relegated next year? I think
didn't.
That's what he alluded to.
He didn't go that
What are
far.
your thoughts on this, John?
Look, I think what we're seeing across sport, we're witnessing that these guys aren't athletes, they're content providers. And a great example of that over the last couple of years has been Liberty Media buying Formula One and what they've managed to do on Netflix. And what you're seeing is Apple view Messi not as an athlete, but as someone who can provide content for them that they can sell. And Messi's got to sit there and say, you know what, I want a slice of that.
So what I'm hearing
I'm going to bring you revenue. And that's the way sport has changed much more so in the last few years. Think of Ryan Reynolds buying Wrexham. He didn't see that purchase as owning a football club. He saw it as a way of providing content from a streaming service, Amazon, who's going to pay him money to create content.
You agree with Alex that this is not rich guys playing, that there's a legitimate future for this league that 99% of our audience doesn't care about? Yeah.
This isn't the same as Saudi money at all.
Okay.
Not at all. The Saudi issue with the Saudi government, that's a PR story. That's about soft power. That's about sovereign states getting a foothold in very popular sports. I think what you're seeing in MLS in this deal between Lionel Messi and potentially Adidas and Apple, building on the legacy of what Michael Jordan did with sneakers. Yet we're doing this now for global media. And I'll say it again, Tom, we're doing it with Formula One. We're doing it with Wrexham and Ryan Reynolds, and we're doing it potentially with Apple and Lionel Messi.
Cheers to everybody on radio and TV who had family watch the Air Jordan movie, and then, of course, we had to go out and buy Air Jordan movies. We had to buy 2 pair of Air Jordans.
How cool was that?
Oh, it's great. Loved the movie. It was really, really quite good.
Building on the legacy of Michael Jordan's mother, who had the foresight to ultimately push for that deal.
Well, this, you know, to be honest with Alex Webb, this seems like a shift, much like what Mrs. Jordan accomplished. You know, it's a different...
In potentially bigger and more complicated ways. Alex, thank you. Alex Webb there of Bloomberg
He
Quick
should become
Take
like,
on the latest.
He's not a contributor. Alex Webb should just like be on Daily. I mean, he's like...
We can come on Daily. What would you like him to discuss? Just anything.
You know,
do TK roulette. You just spin the wheel, Tom.
Sums it, you know.
Whatever it lands on.
He just does a, you know, NVIDIA and...
That's like the show sometimes. You know? TK roulette. Just spins the wheel, whatever it lands on. It's in the zeitgeist.
Hey, Amory nailed the Red Sox-Yankees series coming up. What a train wreck that's going to be.
This weekend. Is that even happening anymore? What's going on with that?
Well, that's a serious question. You've seen the weather changes here. I mean, I don't even know what a ground stop is. FAA cancels ground stop at LaGuardia. I think that's where they're like out on the runway, sitting there. I don't know.
Just the plane's grounded?
Yeah, I don't know.
That seems to be the way that works.
Stuff. Yeah.
Kristen Bidley, a City,
into
is going to join us on her mid-year outlook next.
Welcome back to another special Roland Garros update for Bloomberg TV and radio from Tennis Channel. I'm Johnny Ray Diaz. World number 1 Iga Swiatek took out Coco Gauff in a repeat of last year's final to reach the semifinals in Paris. The defending champion closing out the win in just under an hour and a half and is now unbeaten against the American in 7 meetings. The victory improves Swiatek's record at the clay court slam to 26-2. I'm Johnny Ray Diaz.
So most actors are thrilled if they have one part like Rocky in their whole career. Yeah. You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No, Rambo was a novel by David Morrell. And I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone. And it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was, in the original screenplay, was horrible. He was a psychopath. He killed children, he killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And they said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy.
Because
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology. the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
I think the recession story is frankly off the table at this point.
We're not going to have a recession here, but we are in an asset price recession.
I'm just not convinced that we are going to be able to see growth with the kind of resilience that we're seeing now.
The economy actually in the US remains on a very robust footing at the moment.
At the moment, the US is not our favored region. But if you're looking at over a 10-year period, do you want to be focused on the US or Europe? Well, it's 100% US.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television, and in difficult weather conditions in New York City. We're monitoring the airports, of course, this fire, the fumes, the smoke that we've had come in through the day, and we will stay focused here in this hour on claims at 8:30 and far more on the state of the market. John, mid-year outlooks are out. We're overwhelmed with 40-page beautiful documents about what to do forward.
Overwhelmed and beaten up by the last 6 months. Just a bunch of consensus views shredded.
You mentioned the dollar.
It's the dollar,
Weak dollar.
take
It's
your
gonna
pick.
happen.
China, Europe outperforming. Tech's going to be bad. Tech absolutely ripped. Hello, NVIDIA.
Don't own Apple.
Hello, Meta. Hello, Apple. Take your pick. And now we've got surprises this week. Australia, Canada. What does the future hold for the Federal Reserve? That statement from Governor Macklem, do we get the same thing from Chairman Powell in 6 months' time after announcing a conditional pause that they have to restart interest rate hikes because we're not sufficiently restrictive? That's why some people were spooked yesterday.
I thought yesterday was there, and we said in the opening of the show, you saw the many divergent opinions that we had here, and we're going to really address this head-on with J.P. Morgan Private Bank here in a moment. But to me, John, given the view to the Fed, it's for the people on the sidelines. How do you get into the game if you've missed this?
Comfortable in cash at 5%. Still comfortable in cash
Didn't
at 5%.
listen to Ed Yardeni in October.
I'm still comfortable in cash at 5%, and then it goes higher.
Yeah.
It goes higher, and all of a sudden you've missed out on a 30% rally on the NASDAQ and 100% plus on Meta and NVIDIA.
We've got Ira Jersey scheduler. Lisa, brief us on 5% T-bills. I mean, it's just a whole uproar right now that we're all going to die in the next 90 days.
Yes, there.
Because there's like the debt crisis is over, and T-bills are going to do this or do that. I mean,
That was the narrative that died on Monday. I think that people came into the week saying that potentially we could get a real sucking sound of liquidity out of the market because of the T-bill sales. And then people said we really just had nothing else to talk about. I mean, if you really talk to them quietly, so people have kind of put that storyline aside. There is this larger issue, though. Everyone has moved on from some of the stresses of the fact that bank deposits cost something and that people are now going into T-bills and going out of those deposit accounts. The lack in lending is just really unclear right now, and people don't have a sense of what that slow-moving train really looks like.
That's a two-part economy. We've had some guests here that have really talked about, Marilyn Watson at BlackRock was talking about a pretty buoyant America. And others, John, there's a huge set of gloom out there. Maybe it's centered around housing and the oddities of the mortgage rate, but there's a lot of gloom out there right now. I see it in the buying of puts, the betting on markets going down.
I had a nice back and forth
ginormous.
yesterday with an economist, a well-known economist on Wall Street, and just said, the post-pandemic distortions are still here.
Yeah.
We pulled forward demand of physical things. We're all trying to buy stuff in a pandemic, pushed out demand for services, still witnessing that demand for services right now, re-engaging with things like flying, tourism, TK, no sign of that slowing down anytime soon based on what the airlines have been telling us.
I'll be with Nassim Taleb here in about 2 hours with Bloomberg Invest as well. We'll talk there about the black swans that are out there right now. John, I don't even know where to begin on the data check. I'm going to go to a near 4% 30-year bond. Haven't talked much about it, but once again, yields rising and out in the distance, 4% beckons.
We should also go to the importance of round numbers on SPX, on the S&P 500. Apparently, we don't like 4,300. We like 4,299. But can't hold that for very long. 42.99.19 yesterday, higher the session. Monday, 42.99.28, a higher the session. Can we break 43?
Giardini, 4,600.
I know.
Tony Dwyer, 2,200.
Did you work that out? Did you work that out?
No, we're doing math with Tony Dwyer, folks. He didn't want to give us a point estimate.
Was it 11 times earnings on what? I forget what the earnings number was.
Last time he's on the show.
11 times earnings was a joke, by the way. Just, anyway.
What we're going to do right now is move on. We'll continue to give you airline headlines as they come out, given the really horrific conditions on the West Coast. Philadelphia hit hardest. But right now, and this is really important, on radio and television, if you want to know at the margin where to allocate next, listen carefully to Kristen Bitterly, head of North America Investments at Citi Global Wealth. We're thrilled she could join us today. There's a buried sentence in the usual blather of a mid-year outlook that you released today, which is, are you playing defense or are you being on the sidelines? That is a perfect metaphor for the emotion right now.
I think that's exactly right. There's this feeling out there that you're either all in or all out of the market. That I think you guys were talking about this earlier on the program, this idea that you're either all in T-bills and sitting in that 5%, or somehow you're chasing and finding a defensive play in tech stocks. And so what we've done, and this is something that we've done from the very beginning of the year, is we've actually been very balanced in terms of our fixed income portfolios, our equity portfolios, where we are fully invested, but we're picking our spots in those asset classes in terms of quality. And when you look at the performance of something like that year to date, it's actually high single-digit returns for a balanced portfolio. It's not the 25% of the NASDAQ, but it's certainly strong returns year to date.
Stan Druckenmiller was great yesterday with Sonali Basak. He talked about the prospect of going into recession and compared almost staples to what's happening with AI and NVIDIA. Can I put in the same bucket some of these tech names with consumer staples?
I would love to hear that in more detail. I think that would be a challenging analysis to do, but I think when we talk about what's happened within the market more broadly, I do think this concentration, and everyone's talking about this is not a new story about the breadth in the market. The breadth in the market, those 7 stocks representing more than 100% of the gains. Even if you look, it's not a uniquely US story. That's a global story as well, that there's 10 companies representing 85% of the global gains. And so what does that tell me? It actually tells me that the market is pretty rational. Where the money has been going into has been these mega cap companies with strong free cash flow generation, the ability to fund growth, not dependent on credit markets, have their balance sheets in order, and a lot of them have raised guidance going forward.
So given that, right, given that maybe there's rationality, but maybe you don't want to play that because you can't really predict the AI future, are you starting to now say that the rational plays of, say, regional banks, of, say, just generally financials, areas that have gotten beaten up, are looking good again if things aren't that bad?
That's one of the themes in our outlook, is actually this coming rotation within equities. So as I mentioned earlier, we have been playing defense. We've been invested in areas like global dividend growers, but some of the areas that we've been eyeing and adding exposure. So something like mid-cap, right? So looking at mid-cap and the valuation differential, trading at about a 28% discount to larger cap. Looking at some of those themes, you have to be selective. This isn't just kind of a broad brush. You want profitable companies just like you want profitable companies in large cap. But that's an area when people ask the question, has this theme gotten away from me? You can actually find earnings. We've reduced that. We think it's going to be about a 6% based on the strong Q1, but still a contraction.
This conversation is used to a normal conversation that was in FBOSI or in, the CFA curricula. I mean, it's shocking to hear this. It's like, oh, a normal conversation after 15 years of oddity. We're all recalibrating. There was no risk-free rate. The Sharpe ratio didn't work. I mean, it's all there is to it. And what's so important here, John, is all the focus of the media, the financial press, is on short covering, a short squeeze, convexity to the upside, stuff I don't even understand. And you know what it's about? The Bitterly world, the David Kelly world, which is the basic idea. Do you have the courage to get off the sidelines? That's the heart of the matter.
The cash trap.
Yeah.
It's been a feature of the show for the last few weeks. Kristen, thank you.
Thank you.
Kristen Bidley, Citi Global Wealth Management. Just the latest on the East Coast air crisis, and I think we can call it that, over the last couple of days. So here's our latest, that this blanket of heavily polluted air covering much of the eastern coast of this United States, Tom, likely to linger until Tuesday.
It's a bombshell. This is a real adjustment here, and this is from the authorities, the U.S. Weather Protection Group over at NOAA, N-O-A-A, and the answer is these are the pros in the room. They've got all the tools, all the whiz-bangs, and Zach Taylor over there and others extend this out from the Saturday-ish talk out to Tuesday. They say there'll be elements of less or more, but all of a sudden, we need to reframe this to Tuesday.
Expecting some flight cancellations today, some delays across airports in New York City and beyond, over to Philadelphia as well, so look out for some of that. I just caught at the corner of my eye Matt Lazzetti at Deutsche Bank walking into the building. We're going to catch up with him around this table in about 20 minutes' time. In the next hour on Bloomberg TV, on the Open, Seth Carpenter of Morgan Stanley, Colin Martin, Charles Schwab, Amanda Lynham of BlackRock. All of that coming up shortly from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word. I'm Lisa Operation says inbound flights at LaGuardia Airport have been grounded due to poor visibility, and further ground stops are also possible at JFK, Newark, and Teterboro. Now in Philadelphia, the region faced the worst air quality in the U.S. early today as the impact ripples south. Large swaths of the Northeast and Mid-Atlantic experience unhealthy levels of pollution, while the National Weather Service warned of deteriorating conditions into Alabama and Georgia. Additional support to fight those blazes as the effects of the smoke blanketed some of the cities with an apocalyptic tinge, forcing officials to urge residents to stay indoors. New York State planned to distribute 1 million N95 masks on.
And now the brand is very linked to Elon. Should it be a company? Yeah. Should the internet be a company? No. And guess what? Anyone can make a new Twitter or a better Twitter or just a whole new paradigm on the internet. And lots of people are trying right now. And that's really cool.
They also spoke more about Silicon Valley's new era of austerity and the future of social media. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
We are at the beginning of a very classic late big cycle debt crisis when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers.
Ray Dalio of Bridgewater, and of course the founder there, I should say, he's in some levels of retirement. Maybe he'll help the New York soccer team compete with Messi in Miami here. Ray Dalio at the Bloomberg conference, and I really want to say that Nassim Taleb. Now, this is the book. I may launch it to the book of the summer here. Outstanding on Spitznagel and Taleb as well. Can't really say enough about it. We're going to dive into that in our seminar. I believe radio and TV are going to cover that. They're also going to cover here, where the market's -3, the bond market. Last 2 days will be led by Ira Jersey, Chief U.S. interest rate strategist for Bloomberg Intelligence, and joins Lisa and I this morning. You're going to die, Ira. And that
Bank of Canada did was they raised rates even though they weren't expected to by a consensus. This followed what we saw from,
and it raises the CPI report for May on Tuesday morning, right when they're about to start their meeting. That could really signal if that comes in even hotter, or you wind up getting a 0.4, 0.5 on headline CPI on a month-to-month basis. It's possible that the Fed could say we have to hike, because if they don't hike, then the market's probably going to say, well, maybe they're done.
But the problem is, what's changed, right? It's 1 week. Everyone's talking about we're going into recession. The banks are going to have a massive crisis. We're just seeing the beginning of it, the long and variable lags. The next week, we're talking about we're totally missing the boat. The resilience is unbelievable. And you're seeing the lag effects of the stimulus from the pandemic. What has shifted so violently to spur the shift in sentiment?
It's, nothing. And I think that just shows you how fragile people's sentiment actually is right now, and how undecided a lot of investors are in, whether or not the Federal Reserve's 500 basis points of interest rate increases is enough or not. And so I think that we're at the point, and this always happens whenever you reach the top or the bottom, is it's a will they or won't they. Now, they haven't cut interest rates to zero, right? We knew that kind of when interest rates got to zero that they were done cutting. But when interest rates are on the upside, there still is that little bit of wiggle room that the Federal Reserve might decide to take. Now, I think what the market's mispricing, if we were going to talk about the very short-term mispricing, is that if the Fed is on hold, that does decide not to hike next week, July is not a done deal, and the market right now is pricing for the Fed to be a done deal and hike in July if they skip in June, and I think that it's more like a 50-50 in July if they decide not to go.
I got 8 ways to go here, and to remind people, this is Ira Jersey, where the world stopped long ago at Credit Suisse with Dominique Constant and others over shocking minutia, which I think I studied and flunked on a number of exams, and Ira's like legitimate adult on this stuff. Do you frame 6% yields, 5.90, 6.00, 6.1% full faith and credit yields?
the yield curve, as you were alluding to, and private investors, foreign investors that are buying the long end, that tend to buy more 10-year, 30-year debt. And that's one of the reasons why I think you have some of these yield curve dynamics that we're seeing. And there's no reason why that won't continue, because you still have the U.S. is relatively cheap. So yields are higher here in the U.S. than they are in a lot of the rest of the world.
Tom said something in the last hour that I thought was fascinating when we were just speaking yesterday, just a couple minutes ago, and he said, this is a conversation we would have been having 15 years ago. This is something people keep saying. Suddenly, for the first time in 2 decades, the Fed doesn't matter as much. This isn't about where they push rates. This isn't about accommodation. How much is that really driving the theses that you're hearing as well from investors as you talk with them? Not necessarily, well, the Fed's going to do this. This is our benchmark, but more, this is the distortion here. Maybe we can play this in the short term because we have no clue what's going to happen.
Well, I think it's the no clue of what's going to happen aspect of the market dynamics currently that are the issue. And you're right. Like the Federal Reserve hiking another 25 or even 50 basis points is way less important than the fact that they already hiked 500 basis points, right? So you can take the Federal Reserve a little bit out of the market. That being said, I think that there is a lot of questions about what's going on with the banks, what's going on in the financial sector, going back to the rebuild of the Treasury's cash balance with all of this T-bill issuance might create more volatility in the markets. We all remember September 2019 when reserve balances got to what I call the tipping point. Some people call it the lowest common level of reserves or whatever it's called, but let's call it the tipping point for now. Once we get to that reserve tipping point, you could see significant volatility in funding markets. That will creep into risk asset markets. Right. And we wind up with a lot of volatility where the Federal Reserve becomes important again, because the Fed will have to do something because they've created this issue kind of artificially by having so many reserves in the system.
All right, Jersey, stay with us. We got to comment on this. This is just out in Bloomberg News reports that Virginia Drosos in Hamilton, Bermuda, with Signet Jewelers, Lisa. Signet CEO says couples buying lower-priced engagement rings. I mean, there's an economic bellwether if I've ever seen one.
Yeah, I mean, we saw it with respect to people trading down from Whole Foods to Walmart for their grocery shopping. This is perhaps a step further. It's a pretty significant investment, and it seems like this trade down is happening in more sectors, but it really feeds into this theme. People are deciding where they want to spend their money. They might travel more, but that doesn't mean that they're necessarily also going to buy a Cartier ring.
Oh, double digit. No, we're not going to buy a Cartier ring, are we, Ira? Double digit same-store sales down as well, but there's little things here which get into the growth. We don't have time to continue with Ira because his entourage is saying he's got to go up to his panel right now. But these are important things. Frankly, I think that what the Signet Blue Nile diamond ring person says is just as important as what some Fed president says when you tell me six are talking.
Absolutely. And it was telling you there is discretion starting to feed into the market.
Stay with us. Claims next. This is Bloomberg.
adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Bloomberg surveillance worldwide on radio and television. John Farrow preparing for the next hour. I'll have Nassim Taleb here coming up at 9 or 10 o'clock hour. Unsure when that is. Looking forward to that. And we get to claims here in a moment. Lisa, we got to talk about the fog that's out there. It's not fog. It's really serious. People with headaches, people really affected all across the Northeast down to Washington.
And businesses closing early in some places as well because people are trying to protect themselves and their workers. This comes at a time where we're getting news that it's going to be maybe even until Tuesday until the weather patterns change. This has been your weather report, but this is serious. It's serious for a lot of people, and it really highlights the nature of the interconnectedness of fires, the worst wildfires that Canada has ever seen.
Washington affected. Their rating of air quality is a little better than New York, which is not saying much. Let's call them both unhealthy. Philadelphia is hazardous, and also hazardous is